This just works, and that's why many traders are using it, and you will be able to get set up similar to this one after this video. It won't be easy, but everything will be explained step by step, so take a seat and pay close attention, and now let's get into it. We start from the daily time frame. And here we first have a look at what the market has done recently, which in this case we're having the market forming higher lows and higher highs, basically going up in the long term. Now here lately we're seeing the market pulling back down, so we need to question and notice what's the closest entry model to the price. The way to do that as quick as possible is to simply look on the left from the last candle. And if you notice right here, there is a pattern known as an imbalance. The imbalance is seen as a 3-candle sequence, from where the first candle is a small candle, the next candle is a large candle, and the third candle is also a small candle. And the gap between these candles is called an imbalance. If you've been watching my channel, you probably already know about them. So what we do next, we're zooming into a lower time frame, usually the 1-hour chart, so we can have a more in-depth and complex look of the price. Now that we're seeing the price approaching the higher time frame imbalance, we switch once again into a lower time frame, into the 5 minutes chart. Now patience for the market to pull back into the imbalance. The market moves towards liquidity like a magnet, so it has high chances to move there at some point on time. You can also set alarms so you receive notifications once the market hits your point of interest. So it finally filled this imbalance. Now we do a quick analysis of the price action. For example, we see that the market has formed a downtrend with lower highs and lower lows, being the move that pushed into the imbalance. Then it rejected right back to the upside, forming a chain of multiple very bullish candles. But the important part is that it has broken up above the last lower high, this being a market structure shift. And also, if we look closely, there was a support that broke down, which led the market to move into the high time frame imbalance in the first place. This isn't that important, but it's better not to skip any bit of detail of the analysis, so we can plan the entry and exit as best as we can. So now we pretty much have 2 scenarios. The market breaks above this zone, retests it, and continues towards the highs, or the market can reject this back down, fill a breaker block or a flipped support from where we take a buy position, targeting the highs. We wait for the market to do its thing. Then we can react based on what happens. So far a rejection, and the market moved into the flipped support. So let's try. Buy on the support. A safer stop loss would be around in the middle of these candles, and take profit above the first highs. Or if you want a higher risk reward, you might even target higher. But so far, I'm keeping it the initial way. And that was the first win here, a 2.5 risk reward on a scalp setup. It's great. So the market moved towards new highs, and being an uptrend on this low time frame, each break of swing high is a break of structure. After a break of structure, a pullback is expected, which is what happened shortly after, with the price moving once again into the past support, and bouncing to the upside after filling it once again. And look how well it has bounced, because this is a very bullish candle, so might even get another setup out of this market. For a more clear view, we can zoom once again into a lower time frame, from the 5 minutes into the 1 minute chart. Now, here we see a downtrend having formed lower highs and lower lows, up until the market hits the support and bounces to the upside. This upside move breaking above the last lower high in this time frame. So once again, the last lower highs are taken as a flipped support from where the market will likely retest and bounce in the case of an uptrend continuation. And that is probably the case because we validated an uptrend here after the market broke the downtrend structure of lower lows and lower highs into higher highs, which formed the market structure shift here. And now we can trade expecting the entry as a higher low and taking profits on the next higher highs. The stop loss placement similar to the previous one, being around in the middle of these 2 zones. And for the take profit, most we can target is above the swing high. The whole logic basically being that if the market already formed a higher time frame uptrend, we expect a high time frame trend continuation in order to hold these breaks of structure. Now patience. It almost hit the stop loss. But then it went straight up, forming higher highs and higher lows in the low time frame, up until it broke above the higher time frame high, which validates a break of structure. And as I said before, after a break of structure, we expect a pullback, and a pullback on an uptrend is a lower time frame downtrend. But 2 setups per session is more than enough on a market. Now we're moving on another one. On the NASDAQ this time, on the daily chart, we see a similar price action like we've had on the past market, indicative of an uptrend. Now we need to identify around this level, An entry model that is as close as possible to the price. And here it's also this massive imbalance on the daily chart. Now we switch into a lower time frame so we can look if the price approaches the imbalance and its reaction to the imbalance, but also to look for more in-depth analysis so we have the highest chances we can to find a winning opportunity. Here, by zooming out on the 1-hour chart, we see price formations of higher highs, then a break of the lows, so normally this would be a market structure shift. However, this did not respect, and instead it went to form another higher high soon after. It's important to know that the breaks and shifts don't always respect. They just have a higher chance to do so, but that doesn't mean that they will always work. So now, if we're looking at what we can see here, if the market would break above the last high, the market would continue an uptrend because of a formation of the break of structure above the past highs. If this happens, we will look for a retest of the past lower highs to hold as a support and take the market higher with a buy position. And if the market breaks down below the lows, this would confirm a market structure shift, case in where we will look for a retest and an opportunity to sell short towards the imbalance, or to wait for the price to hit the imbalance and then look for a rejection to the upside with a buy position. We have many opportunities, we just need to have patience for now. So first we got the market structure shift, basically breaking down below the lows, so this invalidates the uptrend scenario. This large sequence of candles usually leave an imbalance, and here it's quite easy to observe it, with the price actually being right there at this point. So if we've got the opportunity, let's give it a try. Sell short on the imbalance. Stop loss above the imbalance, since this is a quite large zone. And take profit towards the imbalance from the daily chart. This gives a decent 2 risk-reward ratio. There it is. We've got another large bearish candle. So once again, this leaving an imbalance in the market between these zones, imbalance that oftentimes get filled to rejected back down. So we can use this as a potential exit level. But for now that the market is right at the daily chart imbalance, we can switch into a much lower time frame so we can see the price action in more detail. So this is the 1-minute chart, exactly on the moment where the price first hits the high time frame imbalance. Here, because of these large bearish candles, this might also be a valid imbalance. We're considering these zones as potential exit levels. But first, we need to find an opportunity for an entry. We need patience for a volatile reaction. So far, the market formed lower highs and lower lows, indicative of a simple downtrend structure. But then soon after, we finally got a break of the past lower high, forming the first higher high on a downtrend. It's a huge sign that the market might have reversed into an uptrend on this specific time frame. Now, what we usually do is we look for a buying entry model, usually a demand, a support, or an imbalance. Here, the first one I see well is a demand near these lows. So now planning the setup. Stop loss below this lower wick. For the take profit, we might have multiple options, so let's see. Here above these highs might be the second higher high target, or above these highs if we want a higher risk-reward ratio, which also coincides being at the top of this imbalance. This is actually a good confluence, we're leaving it like this. Eventually turning into a big winner. Notice the higher highs and higher lows after creating that market structure shift, just to show you that this works. It's a pretty simple strategy. It's just the analysis that's slightly more complex, but nothing extremely complicated. Now, on a currency pair. Starting from the daily time frame, here once again the daily time frame is following an uptrend with higher highs and higher lows. And lately the price has formed this bearish candle, being the last candle. Now we look on the left of the chart and see if there is any entry model around, which in this case there is an imbalance. But this imbalance looks like it is breaking down. So it's not the highest quality one. We better look for another model. The next one is below, and it's a demand zone, basically being the last downside candle before the large upside impulse. And we see that the price is testing the demand right now, seen on the last candle. And for a more clear view and a way to identify the setups, we can zoom into a lower time frame to see the price movements in more detail. This is the 15 minutes chart. And we see that recently the market broke down below the lows. And because the market was already in a downtrend, this is just a bearish break of structure. Nothing important so far, so we need more patience. Looks like it's consolidating for some time. But then it pushed to the upside into the highs, breaking them and forming an internal market structure shift. It's simply a low time frame reversal from a downtrend into an uptrend. the market holding bullish continuation afterwards, by pulling back down, then pushing into new highs. Having the higher highs and higher lows, we're pretty much expecting to have a similar formation. And being a bullish trend, we have higher chances of a good setup with a buy-long position compared to a sell-short position. And what is one of the best levels to enter and take the market higher? Usually around the previous lows, since we're expecting for the past lows to not break, because if they would break down, that would invalidate the uptrend. That is basically trading against the trend. Trying to predict the exact moment when the market reverses, and that's way too hard. It's more simple to trade with the trend. And because of the wicks, we don't have a clear demand or imbalance. And the market here is actually efficient, so taking this whole area as a support might work better. And because it's a larger zone, you can also take the entry in the middle of the zone. This way you can manage a more safe risk reward. And for better targets, we can zoom out on a higher time frame. Here, for example, on the 1-hour chart, this high could be a great first exit target, or the next high. But let's see with the first one. The risk reward here is more than enough, so I won't go for the higher target. It broke higher before filling the order. Not necessarily a good sign, because we might have missed the trade. Eventually it filled the order right here, and bounced back to the upside for the next couple candles. That's great, because if it shows a bullish reaction, there is a higher chances that it will hold. And now we can also target this high. It's a more realistic level where even if the market reverses, it still has higher chances to at least hit this level compared to the one from above. While the risk reward is still great, it's already close to the take profit, and it eventually closed as a win. And keep in mind, this is enough to become profitable, but not enough to stay profitable. That's a whole another level. But my members receive a lot of trading materials and psychology tricks to battle that issue. So feel free to take a look and also have a great trading session.